Hello and welcome back. Now, if you were following news over the weekend, you would have noticed that the Prime Minister of Italy, Mario Monti, has announced his resignation. It sent shockwaves throughout the markets this morning here on Monday. I have in the studio with me the Head of Treasury at Arab Bank, Rani Jabban. Rani, thank you very much for coming in today and looking at this. Obviously, this has taken place over the weekend. What's your assessment of it all?
It came as a surprise. I mean, it's not really surprising given that Berlusconi has been trying to come back to the forefront of the news and the political news lately. It took by surprise the markets this morning. I mean, we had a strong reaction on the bonds and on the yields and on the stock markets. The euro not so much, a little bit, but I think it will continue to pressure the euro for a while.
But how can, I mean, how can for a country that is so, like Italy, so in desperate need to right its debts, if you like, and come back to a level playing field, how can a country such as Italy find itself having its Prime Minister almost ousted, if you like, by one man, in this case Silvio Berlusconi?
It's always been the coalitions that made and unmade by one man, and in this case it's Berlusconi. It's clear for the political parties in Italy since Monti took over that it's a temporary mission that he's got. So probably with the market pressure easing somehow, they thought it was time to get back to power, and that Monti's mission is over. And that's what Berlusconi's parties indicated a week ago.
But many media outlets are pointing to the fact that, or at least an opinion, that Berlusconi surely can't come back in. So it's almost like he's pulled the party supporters come away, but realistically he's not going to come back in, is he?
Well, there can be a lot of surprises in Italian elections, given how the electoral law is made and the coalition system. Everything is possible, honestly. So yeah, but that would be a huge surprise for the market that Berlusconi comes back in. Everybody thought that the problem was in a way personalized by Berlusconi's figure and his politics. So the fact that he comes in will come as a huge step back for Italy, and I guess so it will be interpreted that way by all the markets. So yields will certainly continue to climb, and the stock markets continue to go down in Italy.
Well, it's interesting you mentioned yields, because I mean we have a graph just to give you an idea.
Yeah, we can see that the effect, the Berlusconi effect, has been quite quick on that yield. It will probably continue. We had all this easing since Monti took over and Draghi's intervention in the summer, but now it can be reversed quite quickly, especially that the S&P, Standard & Poor's, also has put Italy under negative assessment. So there's quite a big risk of downgrade if the Italian elections deliver an unstable government, which is not committed to the reform that the market is expecting.
But when I look at Italy now, it's suddenly back into the fray again. You've got the situation where industrial output is been, I think it's down 1.1% in October, 1.1% lower than the previous month in October. I think the GDP has dropped by 0.2%. Italy's in a recession. Things aren't looking really good for Italy. I mean, are we going to end up maybe seeing a sort of similar thing to what we see with Greece at the moment, where there's a question over its legitimacy in the euro area?
Well, it's not the same situation. Italy's got a lot of internal savings, but it's true that the economic environment is quite dire, with very slow growth, even negative growth. If the yields creep up again, that means that the Eurozone will have to intervene for Italy not to borrow on very high yields. The fact that the structural reform that Monti has started will probably be suspended at best, or reversed if not.
That'll hold them back even longer.
Exactly. So and Italy is the biggest danger for the Eurozone. It's not Greece, it's not Portugal, and even not Spain. I mean, the Italian debt is much bigger than all the other three combined. So it's the most important area, and if we probably have a lot of volatility being due to the elections. So it will start from now, I guess, from the budget vote till the election result and the composition of the government. We probably have an unstable government for after the elections, whoever is the winner. But it's going to be an unstable government. It will be very difficult to pass on structural reforms.
So just more problems really adding to it. Rani, thank you. Just one last question before you go today. Every guest we ask him, we have what's called a Dukascopy question, where we say to you, if you had $1 million US, where would you invest that 1 million right now? We've got a list here: real estate, equity, bonds, gold, cash and oil. So where would you put that 1 million?
Would probably stay in cash for the coming few months, I think, because of what's happening in the Eurozone. We have the fiscal cliff on the other hand. The problems are still there. So I would stay in cash for the moment and probably in US dollars.
Yeah. Okay. Rani, thank you very much for coming in today. Thank you. Okay, well that's it for Dukascopy TV for the moment. We'll be back later in the day and throughout the rest of the week with the latest updates and further exclusive interviews. Until next time though, goodbye.